Thanks for joining for the Q3 analyst call. We hope all of you are doing well and safe. And it's good to see so many participants on the call, and we hope that the results and presentations provided sets of information as required by you. I'll give you a brief summary of the results and cover some of the key aspects of the business, and then we will take your questions. But before that, please let me take the opportunity to introduce my colleague, Mr. Sanjeev Churiwala, who has taken over as CFO with effect from 1st January 22. And my earlier colleague, the CFO, Mr. Ramesh Subramaniam, has moved to a group role in Tata Sons. Along with me are Mr. Anand Agrawal, Financial Controller, Mr. Kasturi and Mr. Rahul Shah from Investor Relations, and few of my other colleagues from the management. Tata Power has delivered a very strong third quarter as both the underlying EBITDA and the profits saw double-digit growth compared to last year. This was despite pressure from rising commodity prices faced in CGPL, Tata Power Solar and Tata Projects. The company has taken several bold and strategic steps, be it either working on the pass-through arrangement with procurers in CGPL or focusing on sustaining margin in utility scale and rooftop EPC through robust bidding and contractual agreements. The impact of these steps is evident and visible in the results of this quarter. Similarly, we have ramped up our efforts in Odisha Discoms with a focus on growing the consumer base, especially in the high-load commercial and industrial segment, and improving the billing and collections through various initiatives. You will see that all the 4 Discoms in this quarter have delivered very strong performance compared to the previous quarter and are now profitable. All our other assets have also operated at benchmark levels and have delivered another quarter of strong performance. Despite the provisions of Tata Projects and one-off order impact in Maithan Power, we have delivered a 42% growth in revenue on year-on-year basis from rupees 7,756 crores to 11,015 crores and a 74% growth in PAT on year-on-year basis from rupees 318 crores to 552 crores. Our renewable business delivered another quarter of strong performance with both RE generation portfolio and EPC portfolio delivering healthy operations. The company achieved almost 50% growth in revenue and doubling of profits from renewable business on year-on-year basis this quarter. We have also been awarded letter of intent for a 300 megawatt of hybrid wind project along with solar from MSEDCL. We also completed commissioning of 2 projects of 100 megawatt capacity in UP in January. Our solar EPC business, namely Tata Power Solar, has registered strong performance in large-scale EPC business and rooftop solar business this quarter, registering almost 70% growth in quarterly revenue from 923 crores last year to 1561 crores this year. With several initiatives to improve margins, Tata Power Solar delivered a strong operating profit of 150 crores and PAT of 8 crores in this quarter. The large-scale utility EPC order book continues to grow with orders worth around 1,800 crores won in Q3, taking the total order book above 10,000 crores. Amongst utility scale projects, we won 320 megawatt in this quarter and were also awarded the EPC contract for India's largest solar and battery storage project of 100 megawatt solar and 120 megawatt battery storage for 945 crores at various sites in Chhattisgarh. Margins have continued to improve and we have prepared for higher model imports in this quarter before the basic customs duty kicks in from 1st April. To prepare ourselves in both our renewable generation as well as EPC business, as higher levels of duties on cells and modules gets imposed from 1st April 22, the company has decided to set up a 4 gigawatt solar cell and module manufacturing capacity using state-of-the-art technology with an investment of approximately rupees 3,400 crore. This capacity is expected to be fully commissioned in next 15 to 18 months' time. We have also participated in the solar PLI scheme, which has been enhanced by Government of India from earlier rupees 4,500 crores to now 24,000 crores in this budget. With a strong 3-decade experience of manufacturing of cells and modules, we believe that this expansion in capacity with PLI benefits from Government of India and the other state incentives will make us very competitive and help us to pursue growth in our utility scale, EPC and rooftop and solar pump business. The rooftop solar business saw another successful quarter, winning orders worth more than rupees 375 crores in Q3, with a strong growth from commercial and industrial customers. Our rooftop order book is now 370 megawatt of total value more than rupees 1,000 crore. We executed 118 megawatt of rooftop solar in this quarter, which was much higher than execution in Q2. We have started seeing meaningful traction under various financing schemes launched in partnership with various financial institutions, and close to rupees 370 crores of orders were financed through these schemes. We have recently entered into an agreement with State Bank of India for a centralized and dedicated processing office for the solar projects through their Surya Shakti cell, which will promote faster execution of loans for solar projects sourced from anywhere in the country. With a slew of attractive features such as smaller down payment, longer tenors, this partnership will help us in ensuring hassle-free financing for the rooftop projects for our customers. The solar pump business has been a key development with EESL tender now moving forward. EESL has now sent the list of impaneled bidders to all the states, and the states have started the process of signing the agreements with the impaneled bidders, and we are at different stages in this process with 14 states. The first set of orders have started coming in, and we have already booked orders for more than 3,000 pumps. With the launch of Tata Power branded solar pumps and our existing strong presence in many states, we expect our pump business not only capitalize on the EESL tender, but also direct sale opportunities that will come. Coming to our integrated CGPL and coal portfolio, as I mentioned, that international coal prices remain high. We were forced to reduce the supply of power from our units under the PPA terms to contain the losses. During this period, we entered into a short-term pass-through arrangement with Gujarat from 13th October to 31st December, and for very short periods with Rajasthan and Punjab. As a result, our availability in this quarter was 40%. Adjusting to the various charges under the PPA, we have been able to reduce the losses in CGPL in this quarter to 458 crores from 863 crores in the previous quarter. We are now working very closely with Government of Gujarat to finalize a long-term arrangement which will ensure both pass-through of the coal prices. As a result of higher coal prices, the profits from the coal companies have improved, providing a hedge against the losses in CGPL. CGPL and coal integrated portfolio have generated a profit of 143 crores in this quarter compared to 16 crores in the third quarter last year. As we had mentioned last quarter, the teams in the 4 Odisha discoms have been working continuously to reduce the AT&C losses. In in spite of being impacted due to the double blow of both cyclone, yes, and COVID-related lockdowns. This quarter, we have seen meaningful reduction in the AT&C losses across the board. This has helped us to register profits of 125 crore from all these 4 DISCOMs compared to rupees 21 crores in previous quarter. The focus in these DISCOMs are on following factors: improvement of reliability to state-of-the-art operations with increased use of technology in various areas of operation, improvement in customer service, including offering various digital avenues for customer services, and reaching out to potential customers, especially commercial and industrial customers, to supply them quality power, including better billing and collection solutions. The focus on operations and profits in all these business has helped us now to deliver 9 consecutive quarters of year-on-year profit. Consolidated revenue for YTD FY22 increased by 33% from 22,860 crores to rupees 30,491 crores, whereas PAT increased by 59% from 957 crores to 1,527 crores. I will now move to the topic of leverage or deleverage. Despite capex of around 1,200 crores during this quarter, net debt has largely remained the same as that in Q2, with healthy operational cash and income from JVs. Healthy growth in underlying EBITDA from business continues to improve the debt metrics. The company is working on initiatives that will help the company in maintaining a very healthy net debt to equity, which stands at 1.58 times, and the net debt to underlying EBITDA of 4.12 times, and these have improved compared to Q2 also. S&P Global Ratings have upgraded the company's credit rating by 2 notches to BB stable, and Moody's has upgraded the credit rating by notch to BA2 rating from BA3 rating. Our renewable monetization process has progressed very well in the last quarter, and the same is in line with our internal timeline. We had mentioned earlier that we are working on a renewable structure that will take care of the capital needs to meet our growth aspirations. We expect to close this shortly, and once done, we will share further details with all of you. We have also started working on our transmission business opportunity. As a part of this, we have started bidding in both M&A opportunities as well as fresh bids under the government TBCB opportunity. We have recently been awarded the LOI for the acquisition of 100% stake in the NRSS 36 through Resurgent Power, where we have 26% investment. Resurgent has also submitted a bid for Isolux transmission in Uttar Pradesh under the IBC process. This process is also likely to be concluded in next 1 month or so, and we will share more details once we get information from the resolution professional. Our EV charging business also continues to expand with nearly 1,300 public charging and 158 bus charging points installed till 31st December. Our network is now spread across more than 250 cities, making us one of the most widely present EV charging companies. More importantly, we have entered into a MOU with TVS Motors to set up 2-wheeler charging points across India, which will further bolster our charging infrastructure and mark our entry into 2-wheeler charging space, where the offtake has already picked up significantly. We have also entered into partnership with many large players such as Apollo Tyres, Naira Energy, Best, Hyderabad Metro, and we will work together with them to build the charging ecosystem. Our journey towards a cleaner and greener company gets further bolstered by the motivation and recognition that we keep on receiving from all of you. In the S&P Global Corporate Sustainability Assessment for 2021, we received a total score of 67 and a percentile rank of 80, which is the highest score for any power utility in the country. The score is also significantly higher than the average world utility sector score of 38. The company is working towards its transformation into Tata Power 2.0. We have started seeing significant traction in many of the identified strategic areas, and some of these initiatives will start showing results in very near future. As we always stress, our transformation will be founded on the pillars of strong balance sheet and healthy return metrics. With this, I hand over the call back to Margaret for the Q&A session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. The first question is from the line of Swarnim Maheshwari from Edelweiss Securities. Please go ahead.
Yeah, thanks for the opportunity and good evening to the top management and congratulations for a good set of numbers. Sir, I have 2 questions over here. The first one is, if you look at the EPC margins, they are at almost about all-time high at about 10%. So what has led to the strong margin profile, and also about the sustainability of the same, if you can give some sort of color over there?
So this depends on how many projects and what type of projects are executed. There is a cycle of execution of projects, and in the last quarter we could execute many of the projects for which the material was sourced during the previous quarter, and also we could get better margins in them because the way the material sourcing and the optimization in engineering was done. So I think it demonstrates that over a period of time the supply chain management has improved, as also our project execution capabilities and engineering capabilities, and all the learnings that we are now getting, we are implementing it in the various projects, and you would see that these type of margins will sustain in future.
Right. So basically, this was better than expected cost realization. Is that right?
Yeah, this was little more than the normal, and this, as I mentioned to you, this is dependent on the sourcing. It's not only just the sourcing of the cells and modules, but also the sourcing for the structures and the balance of plants. So we do a better sourcing and better planning. We are always in a good position to get better margins. Okay, right. Sir, my second question is, now you have announced about this setting up a 4 gigawatt integrated cell and manufacturing module manufacturing capacity. So have we already identified the land equipment supplier since you have given a timelines of about 15 to 18 months from now? Yes, we have identified the land, and the land has all the necessary infrastructure available, and including water and electricity. And we are in the process of finalizing the equipment. Since we have been running a plant with cell and modules, we know from exactly where the equipments have to be sourced, and the consultants are working on it to finalize the orders next 2 months. Fair enough, sir. Thank you so much, sir. I'll get back in queue for more questions. Thank you.
Thank you. The next question is from the line of Sumit Kishore from Axis Capital. Please go ahead.
Very good evening to the management, and thanks for the opportunity. My first question is again on the cell and module manufacturing capacity. Could you help us understand the breakup of the 34 billion rupee capex into cells and modules? what technology are you going for at this point, and what could be the phasing of this capacity expansion? So in phase one, will it come up in less than a year, for instance? Also with the PLI benefit and the duty implementation starting 1st of April, broadly, what is your expectation on the EBITDA margin profile of solar equipment manufacturing?
So the cell and module factory of 4 gigawatt will come in one phase only. We expect to commission the module line in about 13 to 14 months, while the cell line will take another 4 months. So in 18 months total, we should be having both the cell and the module lines. The cell equipments, most of them comes from Europe. It's a high-end technology, and the latest technology, which is the P-type cells, and also the mono-PERC are the ones that we will be using. The module equipments, many of them come from China and other places, and we are zeroed down on where we will be sourcing these equipments. We expect that whatever we will be producing, majorly it will get consumed internally. We have a large plans for setting up our own utility scale, plus the EPC orders that we will have, plus the rooftop and the solar pumps. So virtually everything that we will produce will get internally consumed for the various solar and renewable works that we will be carrying out.
Okay. My second question is regarding the state of progress on monetization of strategic stake in your RE portfolio. I mean, there have been various news articles coming up. What is the state of progress? And on the Mundra merger, where are we? Is it going to happen before end of this fiscal?
So we are in discussions with various strategic investors in our renewable business, and we should be in a position to finalize that soon. The discussions are in very advanced stage. Secondly, as far as the Mundra merger is concerned, the process is on. The last phase of hearing in NCLT should happen, and we do expect that within this financial year we'll get the order.
Thank you. I'll join with you.
Thank you. The next question is from the line of Mohit Kumar from DAM Capital Advisors. Please go ahead.
Good evening, sir. Congratulations on a very, very good quarter and reaching the milestone of 1,000 EV charging points. The first question is, sir, have you finalized the way to monetize the renewables portfolio? Does it include your solar EPC, solar manufacturing and charging, solar rooftop? Is it everything under one umbrella, or can you please share some insight?
Yeah, so our renewable portfolio consists of all the renewable business that we have. So starting from manufacturing to EPC to our own utility scale renewable projects that we run, to rooftop solar, to solar pumps and EV charging. So all this, which is the so-called clean and green business that we are doing, will get covered under this renewable platform. And that is the area that we are discussing with some of the investors.
Secondly, sir, has the PPA for CGPL, which was short term, has it been extended for fourth quarter? And what is the way forward for CGPL over the next 6 to 12 months? And of course, we are talking to Gujarat, but are the other, the other procurers on board?
As you know, Gujarat is the major procurer, and it was felt that we should first finalize with Gujarat, and use the same template with the other procurers. So right now our discussions are in very advanced stage with Gujarat to see to it that it is finalized with the overall boundary condition that the cost of coal should be reimbursed so that it becomes sustainable in the long run. And that is the objective and structure within which we are discussing with Gujarat government. We hope to finalize that very soon.
So lastly, sir, the coal mine production was slightly lower in the quarter. And what is the status of the concession agreement was supposed to be extended I think the concession agreement was about to expire, right, for KPC?
I think the coal mine production was about 15 million tons in the quarter, which is the average production in the coal mines every quarter, give or take some small quantity depending upon if there are very heavy rains during a quarter. But otherwise, the coal mining operations was very, very sustainable. Secondly, the coal mine license is under, again, finalization by government of Indonesia. They have, though the license expired on 31st of December, they have in the interim informed that you can continue with the mining till such time the new license and the new terms of the license are finalized. We expect in next 1 month the decision on this will be taken.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Deepika Mundra from JP Morgan. Please go ahead.
Hi, sir. Thank you for taking my question. So just on the initiative that you had started on selling non-core assets, could you kindly give an update on that as to some of the overseas plants, etc. Any update on their monetization?
The monetization process got slowed during the COVID period. We are very much in the market for monetizing the Georgia plant as also the Zambia plant. The Zambia plant, there has been a dispute also with the government over there in GESCO in regards to the payment that is to be received from us by us from the supply of power from the ITPC plant. We are trying to get that resolved, but the parallel action of divestment continues to be there. Similarly, in Georgia, there were certain issues about the operation of the plant, especially the water availability was a little reduced. That has been to a large extent has been taken care with better rains this year and also better snowfall leading to a lot of water that is coming during the winter months. So we do expect that once the plant operation fully stabilizes, we'll get better value when we do the divestment from this plant.
Thank you, sir. If you could just add about Tata Projects to that, I think you were planning to sell off your stake as well over there.
So Tata Projects, about 3 years back, we had kept it for sale, but since they did not do the IPO and there was a lot of restructuring that was being done by Tata Projects, wherein they wanted to focus on certain types of orders and certain areas, that was withdrawn, that proposal was withdrawn. And right now, there is a huge amount of consolidation that is taking place, especially considering that in last few years, they have got very good orders, and these are marquee orders that they have received for various works in the country. We see a lot of future for that company, and we do hope that as and when the divestment takes place and they go for an IPO or a pre-IPO, we will be able to get better value for us shareholders.
Thank you. One last question, sir. How are you seeing the bid environment change for renewable projects with interest rates rising? Are you seeing funding cost for renewables going up, and is it impact and your thoughts on just your and your peers' activity in the space?
So I think the renewable prices, which had gone up to 2 rupees, are now back in the 240 and 230 range. Primarily because the cost of cells and modules have gone up. Secondly, the funding costs have also risen a little bit, but the impact of higher cost of import of cells and modules is directly felt in a higher tariff at which people are bidding. So I think this will stabilize around that range, considering that from 1st April we'll have the BCD. So we do expect the direct impact of it will be by way of higher costs for renewable projects.
Okay. Thank you, sir.
Thank you. The next question is from the line of Puneet Gulati from HSBC. Please go ahead.
Yeah, thank you so much for the opportunity. My first question is a clarification. So when you were bundling your renewable entity, the upcoming solar manufacturing will also be a part of that entity. Is that understanding right?
Absolutely right.
Okay. Second is on your solar rooftop model where you have 370 megawatt of orders worth 1,050 crore. Are these all capex orders or is there some opex orders on it? Will you earn any annuity income or you will just do it and get over with it?
It's a mix of 3 types of orders. One is pure orders where it is sale orders that we have. The second one is under RESCO supply, whereby you supply them at a cost. And the third is the group captive orders. So all the 3 are there. If you want the breakup, that can be provided to you separately.
Okay, that's fine. And you also talked about the SBI loan scheme, which is collateral free. So would you be taking the risk or will the risk be on the end user?
So these are loans which are taken by the end users. So we are not providing any collateral in this. So it's a relationship between the bank and the consumer.
Okay, so you don't have to guarantee anything, right?
No guarantee from our side.
Understood. And on the EV charging business, you talked about this new tie-up with TVS. In your current 1,200 or 1,300 EV charging stations, what would be the mix between 4-wheeler and 2-wheeler?
Right now, there is no 2-wheeler. This is a very new arrangement that we have tied up. These are all 4-wheelers, public chargers. This also excludes the bus chargers, which is separate.
Understood. And in the 1.95 gigawatt of solar project pipeline, how many is already signed for PPA and what is still awaited?
Beg your pardon?
In the 1.95 gigawatt of solar project pipeline.
Everything, the PPA has been signed. We do not consider any project, take it on our books until unless we have a firm PPA and an approval from the regulatory commission.
So even the MSEDSCL hybrid also PPA signed, the last one?
Yeah, so PPA is signed and the regulatory approval is there.
Okay, understood. That's very helpful. And lastly, if you can talk a bit on the KUSUM scheme, this quarter was slightly slow. What is changing and how do you think it will help?
So the KUSUM scheme, under the KUSUM scheme, whether the KUSUM A, B or C, it is run through a bidding process by ESL, whereby they select bidders based on the bidding process. And over here, once they are selected, they inform the states of the various shortlisted bidders. Unfortunately, for a certain period of time, the bidding process was delayed, and also there was a court case due to which they could not finalize that order. The order was finalized in the month of October, and thereafter they have started informing all the concerned states. We expect, again, in November, December, because of COVID, many of the states had impacted by that. So now the orders have started flowing in.
Okay, understood. Thank you very much. This is very useful.
Thank you. The next question is from the line of Atul Tiwari from Citigroup. Please go ahead.
Yes, sir. Thanks a lot. So just one clarification on CGPL. So as of now, how many units are operational pending this finalization of agreements with Gujarat government?
So during the month of January, there were 2 to 3 units which were operating. Right now, of course, 1 unit is operating. As you would have been aware, month of January, the export of coal was banned by Indonesia. So whatever coal we had, we ran 3 units and then 2 units. And now that the coal supply has recommenced from 20th of January, we expect that we will ramp up to all the 3 units in the next few days.
Okay, and the current generation is happening as per the earlier long-term PPA and not the new short-term PPA, right? Whatever
No,
generation
it is going to happen as per the new arrangement which is under finalization.
Okay, so as of now, the power that you are supplying, how are you billing for that power? Does it have a pass-through for the coal cost or?
Yeah, it's a pass-through for the coal cost, and it's an interim arrangement, but it will get regularized once the final agreement is signed.
Okay, great. And sir, just one question on this manufacturing unit. So what about the backward integration, polysilicon and wafers? Some of the other players who have entered the industry in India, they're talking about, manufacturing that as well. So are you looking at that, or is it a part of your plans, or you think it doesn't make sense to have that capacity?
Yeah, we are looking at that, but it has a different technology requirement. So we are looking for some global players who have the experience in this type of technology. It's a very complicated, very difficult technology on polysilicon. And so once we finalize that, secondly, at this stage, the BCD is only for the cell and modules. There is no BCD on the polysilicon ingot or on wafer. So at this stage, we are going to import them without any duties. But at some stage, we will definitely be looking at upstream manufacturers.
Okay, so in the interim, the import will most likely be from China only, right? I mean, is there any other?
Yeah, they have added a huge capacity, and so also some of the other places. But majority of the supply will happen from China.
Okay, okay. Thanks a lot.
Thank you. The next question is from the line of Apurva Bahadur from Investec. Please go ahead.
Hey, hi sir. Thank you so much for the opportunity. So on this, continuing on this 4 gigawatt module, 7 module plan. So wanted to know on this PLI extension. So will this be the further subsidy be on the bids which were earlier placed, or do you expect any change in terms and conditions over there? And accordingly, what percentage of our capital cost would be offset by the incentive if we are eligible for it?
So based on the earlier bids, they had through a bucket filling arrangement, they had given to 3 people who had come up with a proposal for integrated manufacturing facility right from polysilicon to modules. There were large number of other bids which could not be covered in that because the amount was just 4,500 crores, which was utilized in the bidder. Now that the new scheme has come with 19,500 crores additional amount, this will cover all the others also, including those who are only in cell and module. Based on our initial analysis, we find that we will be entitled for something like 1,500 crores of PLI over a period of 5 years. So this is based on every year how much you produce, and the incentive will be linked to that.
Okay. Very useful, sir. So secondly, my question is on the transmission opportunity, which I believe now you have become very keen on. I think from the last 2 or 3 quarters, it's been repeatedly featuring in your commentary. So, sir, how large do you see this opportunity, or and how long do you think will it take to start fructifying?
So the opportunity is very large in the country, especially considering that government plans is to add 350 gigawatt in next 9 years, and the evacuation arrangement has to be made for that 350 gigawatt. Some calculations which we have seen from the government side and some of the consultants are talking about something like 30 lakh crores will be required in the renewable as well as in the power evacuation and distribution space. That gives nearly 3 lakh crores every year that will be required. So there's a huge opportunity if one has to implement and meet the 2030 obligation of clean energy.
Fair enough. Sir, also on our module or on the EPC business, like you said that we have been benefiting from the positive side of the execution cycle, right? Now, given that the module prices have gone up, so the orders which we have won almost like just prior to the price increase, do you foresee provisioning, a requirement of provisioning over there? And if yes, how large will that be? And lastly, on the battery orders or storage orders which we are winning, will we also be supplying or procuring the battery, or that's completely the cost of that will be a pass-through? Just wanted to understand if there's, I mean, if you are open on that end as well.
So the price of cells and modules started going up more than a year back. So all the orders that we have got in last 1 year, we have accounted for the higher prices of modules. In fact, what we are now seeing is that the prices are coming down, and possibly we may get an upside on that if some of those equipment comes in this quarter. So we have accounted for all these cells and modules which have to be imported, and whatever we had received in the last 2-3 quarters, those were on the earlier prices, and there we were hedged because of our long-term order placement that we had done. As far as the batteries are concerned, batteries will be procured like any other equipment. And again, we get it because of the scale at which we operate, we are able to do a much better negotiation and a long-term supply arrangement with many of them. In the last quarter, I had mentioned to you that we had won a 50 megawatt hour battery for Ladakh Leh along with a 50 megawatt solar facility. This is a 100 megawatt solar with 120 megawatt hour of storage. So considering large number of orders that we will be placing, we are able to leverage that and get much better terms and conditions.
Sure, sir. So just one last bookkeeping question from my side, and this is on the 60 crore provisioning in coal business. Can you highlight what is that regarding? And also for Mundra, have we accounted for all the fixed costs under recoveries in this quarter, or there's something, I mean, there's a possibility of some more in the following quarter as well?
I couldn't get it.
Your voice was not clear. Can you repeat that question?
Sir, wanted to know this 60 crore provisioning in coal business which we have done this quarter. What was this about? And also on the fixed cost under recovery which we have provided for at CGPL in this quarter, 233 crores. Is that for the entire FY22, or should we expect something more in Q4 as well?
So this was basically for last year when there was a write-off one time for our Far East investment, the mines in Russia which were exploring, and the other was additional taxes in our Indonesian mines.
Okay. And sir, for the CGPL under recovery?
That we are accounting for every quarter.
Okay, fair enough, sir. Thank you very much.
Yeah.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants, we would request you to please limit the question to 2 at a time. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Rajesh Ainor from ITI Long Short Equity Fund. Please go ahead.
Hello.
Ms. Ainor, may I request you to come on the handset mode and ask your question?
Yeah, I am on the handset mode. Am I audible?
Yes.
Yeah, so most of my questions have been answered. Just one thing on, the medium and longer term targets for us for carbon neutrality, because we are operating in 2 segments. One is where, the carbon is actually used in our power generation business as well as coal mining, which we operate. And the other one is, the RE and the new energy businesses where basically we can get sort of an offset. So is there any sort of timeline when we will turn carbon neutral, and, what are our plans for internally the plans for reducing the carbon footprint? I mean, will it be a gross reduction, or will it be, like we'll have more and more RE, so anyway the carbon heavy part at the net level will get reduced?
So I think in our earlier presentations also we have shared that right now 32% of our generation by capacity is renewable or non-carbon, and 68% is the carbon generation. We had said that by 2025 it will become 40%, and by 2030 it will become 60%. We had also said that we will become net zero carbon by 2050, which subsequently we had improved and said by 2045. As we have existing PPAs, and these PPAs will have a certain time period to which we are committed to supply power, those PPAs have to be exercised, and only after those PPAs expire we can come out of the supply of coal-based power. So we are working on these lines. Our new investments are only going to be in renewable. We are not making any fresh investment. And in fact, we were the only company in the power sector 2 years back who took a stand in the country that no more new investment and only new capacity additions will be renewable. So we are committed to that.
Okay. And sir, just one question, do we have any assessment of what is our current carbon footprint of, that 65+% business, which is still carbon?
I think Rahul and team will be able to share.
Can we try it separately?
Okay, sure.
Thank you. The next question is from the line of Rajesh Majumdar from B&K Securities. Please go ahead.
Good evening, sir. Thank you. Thank you for taking my call. Some of my questions already answered. I had a couple of questions. One is on equity IRR you're getting on the RE projects now. What is your current cost of debt for the RE projects, and what is the equity IRR you're realizing on the new tenders you're bidding on the TBCB side?
We normally don't share the equity IRR number, but it's a very healthy team number that we have, and that's where we do. Like in our regulated business, there are certain returns. So Similarly, in renewable business, we don't do anything which is less than what we do in the regulated. Secondly, the second question was there? Interest, cost of interest.
The average cost of debt for the RE business, yeah.
7.5. Yeah, so it keeps on changing, but it's in the range of 7 to 7.5, depending upon when we go and get the disbursement.
This is including foreign currency debt and hedging cost, etc. Right?
Yeah, everything put together.
Okay, thanks. So my next question was, we have a return on equity on the fixed regulated equity business, and depending on what we are able to increase, get from the solar side, should we see our overall return on equity profile actually coming down until and unless we get a sharp jump in the regulated equity, depending on the project that we have talked about on the Mumbai side and etc. How do we look at the return on equity of the firm going forward, 3-4 years down the line, given the fact that the solar business is much more competitive than the regulated equity business?
See, return on equity is a good metric for regulated business. For renewable projects, it's differently structured. So where the return on equity is not the correct metric because it's a much longer period because of the tax reasons that in the initial years you have a very strong depreciation benefit. So return on equity for a renewable project will not be a correct metric to look at.
Right.
Equity IRR.
What I mean to say is that, sir, basically we see a lot of profits now coming from the coal business, which is something which may not be sustainable in the long run. So without these profits, if you look at the standalone business, if it is not showing any major increase on a YOY basis. So how do we see the overall business profile?
There is nothing like coal business is going away immediately. We have PPAs which are going to be there for next 20 years. So it's not that the coal business will not give returns for next few years. So I don't think that that's a correct statement.
I think coal prices are lower, our CGP losses will be lower. Yeah. It's more of a hedge for us.
Right. So would you just kindly tell me as to the status of the investments we have planned on the regulated business side in Mumbai? What is the status of those T&D projects?
So every year we do about 500 to 600 crores of investment in our transmission project, and about 150 crores in our distribution business in Mumbai. Similarly, we do our investments in Delhi distribution as well as in the Odisha distribution. And these investments are based on the requirement of improving the network, customer service, technology upgradation. And these are all approved by the regulator before carrying out any of such investments. And these all carry a regulated rate of return.
But we are planning to have a significant capex on the Mumbai side of, I think, if I remember, 6,000 crores on one particular project. What is the status of that?
No, not on one particular. There are a large number. Every year we are doing about 600 crores. So we have a plan that in next 7 to 8 years we'll do about 5,000 to 6,000 crores of investment.
So the moderate capex every year, is that the assumption?
Yeah.
Okay. So no one-time jump in terms of capex, either on the T&D side or from the FGD side or from any such project.
So it depends if we get more distribution locations or if we go get more of transmission projects where we are assured of a good return, we can look at those investments. But otherwise, in routine, we will have about 1,500 crores of investment in Odisha Discoms every year, about 600 to 700 in So that sort of investment will continue to get us a return on the 30% equity that we put in those projects.
Thank you, sir. Thank you. Thank you for taking my question.
Thank you. Ladies and gentlemen, please restrict your question to 2 at a time. The next question is from the line of Aniket Mittal from SBI Mutual Fund. Please go ahead.
Yes, thank you for the opportunity. Just a couple of questions on the renewable front. Firstly, if I were to go back to your the targets that you've set for renewable, we've set a target of almost 15 gigawatts of renewables by FY25. And as things stand, and the competition intensity that there is within the market, are you still confident of reaching those targets? And if so, could you throw some light? How do you plan to reach there?
See, I had shared with you earlier also that the potential of adding 300 gigawatt in next 9 years to meet the 500 gigawatt commitment that India has made in COP26. Now, that means that in next 9 years, we'll have more than 30 gigawatt coming every year. Now, there are not many players who have the capability and resources to execute this sort of quantity. Our 2 gigawatt is a very small percentage of the total 30 gigawatt every year. And we are very confident of meeting that. We had also shared with you that we are not just doing pure solar projects. We do solar and wind. We do solar, wind and hydro. We do solar, wind and storage. So there are large number of solutions that we are coming, and that gives us much more edge compared to the competitors and the value-added services that we can provide. So we are very confident of that number. And incidentally, we are looking at something like 1,200 to 1,500 megawatt of rooftop solar every year, about 400 to 600 megawatt of solar pumps every year. So there is a huge quantum of capacity addition that will happen apart from the utility scale that we will be setting up.
Okay. Because the number looks fairly steep from your own. See, another question was on the execution front. So if I go back to the start of the year, I think you were guiding for almost 1 gigawatt of your portfolio to be executed during the year. But as things stand, we've commissioned only 350 megawatts. Just to understand, are there any issues that we are facing on the execution front? So why is there a pushback in the commissioning of our renewable projects? And for the balance 1.9 gigawatt, if you could help us, how would that phase out over the next few years?
Yeah, so this year has been a very peculiar year, starting from April when we had the COVID second wave. For nearly 3 months, work could not be carried out at any of the sites. And it was only in the month of July that we started the work. There were also issues about the high cost of modules and also shipping constraints which was there from China. So all this put together with, again, the third wave coming in December, January, has impacted the project. We are trying to catch up, and many of the projects are lined up for execution in this quarter. And hopefully, in this quarter, we'll be able to add a huge amount of capacity which got delayed. In fact, in January, first week itself, we commissioned 100 megawatt, and we are confident that more capacity will get added in this quarter.
Could you provide us how that 1.9 gigawatt would phase up? Let's say, how much are you targeting in FY23?
Details, Rahul will give you separately.
Okay. So, just one last bookkeeping question that I have. Could you tell me what are the total receivables at your Odisha discoms? All the 4 discoms combined.
Total receivables of Odisha discoms. So Rahul will give you, I think that's part of the tech presentation that has been shared with you. He'll give you the exact number.
All right. Thank you so much for taking the question.
Thank you. The next question is from the line of Subhadeep Mitra from JM Financial. Please go ahead.
Good evening and thank you for the opportunity. So my first question was with regard to your renewable addition targets. You mentioned 2 gigawatt per annum. So if I understand this correctly, you're sticking to your target of 1 gigawatt of addition on your own through your own utility scale, and the balance 1 gigawatt being EPC mode. Am I right in understanding that?
No. 2 gigawatt is utility scale, which we will develop ourselves, and 1 gigawatt will be the outside EPC. So that is the number that we have.
Understood. So, sir, on this run rate of this 2 gigawatt utility scale, how have you fared so far in FY22? Have you, more or less more that target number in terms of incremental order wins? And do you see power sale agreement signing becoming a hindrance in this basket?
So we have right now something like 1900 megawatt of order which is under execution. And this year we have got 900 megawatt. This year the run rate has been a little low because many of the projects which were supposed to be bid out have got delayed. Now we expect that these projects will get bid out, especially considering the COP26 commitment that the government has made. So the government is now coming up with a large number of projects which have to be executed, not just plain renewable, but along with storage. Also the RPO obligation, which was earlier just 20%, it is expected to be increased to something like 40 to 45% on a graded basis over the next 9 years. And also we are finding that there will be large amount of push on rooftop and open access supply. So we do expect that if we have to meet the 300 gigawatt target, there will be large number of bids which will be coming in the next 1 year. And we should be in a position to bid and win many of them. Incidentally, our win percentage is about 20%. So wherever we bid, we of course don't bid in all the states. Some of the states we don't bid because of their track record in payment and all. But wherever we bid, our success rate is 20 to 25%.
Understood. And just with regard to the issue on PSAs, because I think there were some numbers that we were looking at, and it at least appeared to us that 40 to 50% of solar tenders which have happened, let's say from 2019 till date, probably don't still have PSAs, including the domestic manufacturing ones and others. So any sense on that? Do you see that as a challenge?
Yes.
No, but all our PPAs are with the state DISCOMs. So there is no agreement through SECI. So there is no bid that we have done through SECI. All of them are through state DISCOMs, and we have the PPAs there.
Okay. That is an interesting point. So secondly, on the coal business, just wanted to get some clarity that optically it appears that the coal profit numbers, if I go as per the deck that you have sent, the QOQ number is quite flattish despite the realizations being higher. So would these largely be because of the penalties on the ban of imports, etc., that came in? If you can just throw some light on that.
This penalty in import is only come in the month of January. This is for the last quarter. The prices in the last quarter were very high. They were in the range of $160 to $200. And now also the prices are very high. It's again in the range of $160 to $190. So I don't think we have any issue as far as the export is concerned. They had a requirement of domestic supply, which has always been there, and they supply, KPC has been supplying 25% of their production locally to GNL. So they meet their local obligations otherwise also.
Generally, they meet in the last quarter whatever the shortfall is there, and hence there is no huge bump up on the profit.
Yeah. So that would impact fourth quarter, right? That the domestic obligation would be met in fourth quarter. So
for them it is December.
Oh, I see. Okay. I understand. That's CY based. Okay. So then, hopefully the benefit of the higher coal price should be now visible in the fourth quarter of the fiscal for us.
Yeah.
Okay. Understood. So last question is on Orissa. Naturally, the current quarter's profit numbers are, very healthy and there's great YOY growth. Just wanted to understand what can be the normalized, quarterly trend that we can see.
So as I mentioned, the performance will improve every quarter because our billing efficiency and collection efficiency is improving. Last quarter, again, we had a challenge of collection, especially in the month of December because of COVID. Hopefully, in this quarter, we would be able to take care of that. Similarly, our billing efficiency will also improve because large industrial and commercial consumers have come back to us, and they are very happy with the quality of supply that we are giving. We are also seeing that the places where the metering was not happening or proper metering was not there, or provisional billing was taking place, that is all getting metered. So you will see a huge amount of improvement in the coming quarter.
Understood. So the current quarter's profit number is more like a sustainable number with some growth element.
It will be much better than this.
Understood, sir. That's it from my side. Thank you so much.
Thank you. Please request participants to please limit your question to 2 at a time. The next question is from the line of Anuj Upadhyay from HDFC Securities. Please go ahead.
Yeah, thanks for the opportunity and congratulations on good set of numbers, sir. So could you just mention about the capex which would go in for the expansion of the module and cell manufacturing for the 4 gigawatt capacity?
So the capex is 3,400 crores, and we would of course be getting some PLI benefit, which will be on an annual basis, and also some state government subsidy and some concession. So all that will be taken care when we are executing the project.
Okay, so probably it would be 3,400 minus this benefit on a capex front over the period of time. Okay. Second is, sir, on the equity dilution side, I mean, especially on the monetization of the renewable asset. So would that platform include our EPC business as well, or it would be only the renewable assets across the Walwhan and the Tata Power Renewable?
It will be everything in renewable, including EPC, including manufacturing, including new manufacturing.
Fair enough. And lastly, sir, on the Mundra, sir, if at all we find some kind of resolution with the Gujarat, then how much unit we plan to run for the Mundra going ahead?
As per the PPA, Gujarat is entitled to receive 1,805 megawatts. So the 3 units will run for their requirement.
And it would be, fuel cost would be a pass-through. I mean, as per the resolution which we are expecting.
Yeah.
Fair enough, sir. That's it. Thanks.
Thank you. The next question is from the line of Swarnim Maheshwari from Edelweiss Securities. Please go ahead.
Yeah, hi. Sir, so what's the current carbon inventory for us and any plans to monetize it?
Yes, we have definitely plans to monetize them. The documentation and other work in the progress. It's a huge amount of detailing and invoicing details, metering details, all that has. So it's a cumbersome process, but definitely under discussion and finalization.
Is that possible to quantify, with the current realization trend and all, what could be the sum that could be monetized?
Yeah, sure enough. I think Rahul will be able to provide you all the details.
Sure.
Because this is from a retrospective effect from 2014 and 2016 onwards.
All right. And sir, just one clarification. So now we are bidding for Isolux and all the other transmission projects. So fair to say that all transmission projects will be bid through Resurgent platform, right? Nothing will be under.
No, not at all. See, Resurgent platform was created with a specific mandate and a specific amount to be invested. The 450 million that was set for that was used for Prayagraj and the 2 Resurgent bids for transmission that we have done. With that, the total amount gets fully exhausted. So all future bids will be under Tata Power.
Acha, okay, everything will be in it. All right. Fair enough, sir. Got it. Thank you so much and all the best.
Thank you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question for today. I now hand the conference over to Dr. Sinha for closing comments.
So once again, thank you to all for joining for the analyst call. Whatever questions you have in future, you can always send it across to Michael, Rahul and Kasturi, and we'll be happy to provide you the necessary information in detail. All of you take care of yourselves and good night.